Welcome back. I'm Pratap here. Today is 21st August 2024. In this video, let us evaluate the performance of high liquidity zones generated from our previous report. Even before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So from our channel, click on this community tab, then you get access to this post. This post is having a YouTube playlist link that is having all the training videos. So you just need to click on the link. I am clicking on the link. Now we are into the playlist to supply demand zone price action course. Here you have 24 training lessons are available. And from these 24 training lessons, you have 62 training videos are available. And to access the first video, first lesson, you need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at the Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in our yesterday's end of the day report. So we have identified 7 high liquidity zones from daily and 75 minutes time frame. And from these 7 high liquidity zones, we got only one trade today, that is Nestle. And moreover, it is a trade from the concepts you learned in lesson 21, strong rejections from the zone. But anyway, this is a 75 minutes high liquidity zone. Let me explain how we fine-tuned the zone, and later how we achieved the RR. These points we will discuss. So I'm changing the time frame to 75 minutes time frame. So here we have a rally, 3 base candles and a drop candle. So rally, base, drop. This is the 75 minutes high liquidity zone identified by our software. And this 75 minute zone is fine tuned with 15 minutes time frame. So here we have a fine tuned 15 minute zone. So we have a drop candle, we have 1, 2, 3, 4 base candle and a drop candle. This is a medium size like candle, part of the base, because there are earlier candles are available. Okay, this 15 minute zone again fine tuned with 5 minutes time frame. So I am changing the time frame to 5 minutes. Now we are in the 5 minutes time frame. Let me show you how I fine tuned the 5 minute zone. So here you have a rally candle, base candle and a drop candle. Rally, base, drop. So this is the fine-tuned 5 minute zone. And after that, see the rejections from this zone, near the zone. That means there is a very strong order flow in this 5 minutes area. See the rejection. And after that, one more rejection in the next candle. And thus, see the move down, how the prices, how sharply they moved down. And again, after that, there is a retracement. Prices entered into this zone, and again how sharply the rejection came out of the zone. In lesson 21, you learned a concept called rejection, strong rejections away from the zone. This is the classic example for that concept. I didn't remember whether it is a 6th video or 7th video in lesson 21. Please correct me if I am wrong. So there is a concept called strong rejections away from the zone. See? This is a rejection away the moment prices entered, then the rejection away from the zone. See how sharply prices moved down. That means there is a strong order flow in this area. When such kind of strong rejections are there, it supports multi-testing. This zone will work like a high liquidity zone. But there will be institutions, the main reason behind this strong rejection is institutions kept a very strong order flow. See how good profit you would have got from this zone after this trade. And again one more rejection, one more trade it has given. See here again in this candle. This is on Monday 19th August. See again the prices went and see the strong rejection from the zone, how sharply prices are fallen down. So that means still there is a very strong order flow. So there is nothing wrong in taking one more trade also. So today we got the trade. But unfortunately you got the trade. Today the price action is not like what you experienced earlier. Prices stayed, but anyway you took a trade, but prices stayed a lot of time, and also the zone is fine-tuned zone is pierced, but still you are in the trade, but it didn't hit the stop loss. You are within the trade because you will be adding a stop buffer. So it is the price is within the stop buffer area, and after that the prices are coming down. We have seen many times the prices slightly pierce within the stop buffer, and then prices will go down. That is what happened. But where is our target? Generally we keep 15 minutes target. But achieving this 15 minutes target is like achieving 10% intraday ROI based on one future margin cost. When a zone is pierced and getting 10% ROI is strictly speaking, it is not at all practical. Then how we need to book the profit? Either you can go for 1:3 RR, because the zone is pierced. If the 15-minute zone is within 6% ROI, probably it will achieve. But it is almost 10% ROI level, this one. And a pierced zone giving you 10% ROI is not practical. I am not telling it is not possible. Rarely it may give you, but it is not practical. But if you want to book the profit, what is the basis you have to take? Either you can take 1:3 RR, or you can go for 1:5 RR, either one. Sometimes it may not achieve 1:5 RR, it may give you only 1:3. But today in this stock, it has given you up to 1:5 RR. The blue color line what I have drawn is 1:5 RR. Slightly below the blue color line prices went, and after that prices moved up, and then finally once again started moving up because this zone is already pierced. See, this time easily the zone is violated and moved up, and finally market is closed. Now this zone is no more valid for future references. But today, even though it is pierced, luckily you got a trade, a successful trade, and gave you 1:5 RR. Maybe some of you might have exited at 1:3 RR, but those who aimed for 1:5 also achieved. Generally people use different techniques for achieving more RR. One technique is you already land trailing stop. You can use after achieving 1:3 RR, you can look for a 1 minute trailing stop loss until it reaches 1:5 RR, so that you can book your profit at 1:5 RR. You will get the maximum. Still you may feel, some of you might feel, even it may give 1:6 or 1:7 RR. Still if you feel, you can go for a trailing stop loss. Probably somewhere here one of the 1 minute zone might have been violated, but your profit margin slightly it would have been reduced, but at least 1:4 RR level your stop loss might have hit. That way you book the profit, you get the profit. And why you have gone for 1 minute trailing stop loss? Maybe after reaching 1:5 RR, you might be thinking further it will further go down. It may achieve 1:6 RR or 1:7 RR, or you want to grab more profit. At the time you have to use 1 minute trailing stop loss. The day is good for you. Probably it will reach your expected level. If the day is not really good, probably some of the profit you have to lose after reaching 1:5 RR. Probably you need to compromise with either 1:4 or a little less further. But anyway, these are all the techniques how you can grab more money if you want. But today it has given up to 1:5 RR. Exactly 1:5 RR. I have fine-tuned the zone. Yesterday's video also I explained you how to fine-tune the zone. The technique I have explained. It's a very important technique. So how much profit Nestle has given today? 4,090 rupees profit, and which is 4.6 ROI. Profit is very less. Why we got good ROI? Because one future margin cost is very less. It's only 89,000 rupees, or close to 89,000 rupees. So that's why you got more RR. See, yesterday also in one of the stock, Tata Communication, you got 4,400 profit, but your ROI is return on the investment is only 2.5%. The reason is here the margin cost is more, maybe around 1.5 lakh or 1,60,000 margin is there based on one future. But here you got 4,000 rupees profit. Still you got 4.6% ROI because your margin cost is less. If you would have invested 1,80,000, close to 1,80,000, sorry, 1,60,000, because yesterday this margin cost was around 1,60,000. So today you would have got 2 lots. With the 2 lots, you would have got 8,000 rupees profit. With the same amount, yesterday you got only 4,400 rupees. 1,60,000 rupees, you got 4,475 rupees profit. With the same 1,60,000, you would have purchased 2 lots. With the 2 lots, you would have got 8,000 profit you would have got. So that's why our ROI is more compared to yesterday's Tata Communication trade. So this is a Nestle India. This is based on the concept what you learn in lesson 21, strong rejections moving away from the zone. This is one good example for strong rejections moving away from the zone, which you learned in lesson 21. The high liquidity zone strategy. In lesson 21, you have several videos. So one of the videos you have learned this concept. Strong rejections moving away from the zone. The strong institutional order will be there. Until the zone is violated, you can take the trades. That means multiple times you can accept the trade. So that's why we took the trade today. But zone is slightly pierced, but it did not hit stop loss. And after that again sharply it came down and reached up to 1:5 RR. After that the zone is violated because earlier it was pierced. There is no institutional order flow. Now this time easily it moved and completely the zone was violated. So that's why you can't take another trade here. If it is not stopped out, here you would have taken another trade. Maybe that could have been another successful trade. Because your zone is pierced, it is confirmed that there is no more institutional strong order flow in this area. Because of stop buffer, your trade is saved and you are able to get up to 1:5 RR. I am saying up to 1:5 RR, this is the maximum return it has given. Some of you might have exited before itself, but this is what the opportunity our software has given. This is the point you have to understand. So this is the only one successful trade from today's list. There are other stocks. How I fine-tuned, let me explain. First one is daily zone, Adani Ports. This is a daily high liquidity demand zone. We have a drop base rally. So this is the daily zone. I have fine-tuned this zone with 75 minutes time frame. And here there are no 75 minute zones here. This entire thing is a wick. But in the recent price action, a new 75 minute zone was created. We have a drop, 2 base candles and a rally candle. This is a medium size leg candle, but it is part of the zone because of the earlier base candle. And now we have a leg out. And this 75 minute zone again fine tuned with 15 minutes time frame and identified 2 15 minute zones. You have a rally, base, rally, and also again here you have a drop, 2 base candles and 1 medium size leg part of the base. So total 3 candles part of the base and then a leg out moving out of the zone. Drop, base, rally. This is another 15 minute zone. Both the 15 minute zones I fine tuned with 5 minutes time frame. And in the 5 minutes, let me explain how I fine tune here. So here you have a rally, you have 2 base candles and we have a rally. And again here you have a rally, 2 base candles and a rally. This is another fine tuned 5 minute zone. But today, slightly we missed this trade. Otherwise, it could have been a very good trade. Slightly we missed. Sorry, it's not Adani Ports, it is ICICI Bank. We missed slightly. Sorry for my mistake. Today prices didn't come near to the zone. ICICI we slightly missed. I'm sorry for that. So this was the morning candle. After that it moved. So there is no, prices did not come till the fine-tuned area. So there is no trade at all. The next one is ICICI Bank. We already seen previously we got a trade from ICICI Bank. During this month, few days back, we got a successful short trade. And you know, ICICI Bank is moving between high liquidity demand zone and high liquidity supply zone. Either side you can take the trade. This zone we have fine-tuned. Previously we took a long trade from this 1 minute demand zone. This 1 minute demand zone also, we took a long trade previously. So at the time, ICICI Bank created a new 15-minute zone here. Here already we have a 75-minute zone here. We have a drop, 3 base candles and a rally. So in this 75-minute zone, the 15-minute zones recently created. This is, we already fine-tuned earlier and we took a trade here in this 1 minute zone. At that time we got a good profit. So on that day, during that live market, a new zone was created. Now anyway, it is a end of the day data, not on the live market for yesterday. Already in this price action, we have a ERC candle as a leg-in, you have a base candle, and then again you have a rally candle with a huge gap up. So we have this 15-minute zone. This 15-minute zone again fine-tuned with 5 minutes time frame. So we have a rally candle, 2 base candles, and again a rally candle with a hidden body. And this is with a huge gap up with hidden body. Already pro gap area is there. Because of the pro gap, today prices reached within this pro gap. See, previously I told you the price action. Below this, in the pro gap area, until here it consumed the order. There is a lot of order flow. So some more below it came. And after that prices moved up. So that means it took some more institutional, it consumed some more institutional pending buy orders from the pro gap. Okay. Maybe one would have taken a trade like this. I told you the technique, how you can add a dynamic, how you can add a entry buffer based on the price action. See, previously the low of the candle is here. So let me draw a horizontal line. Just below this or exactly at the blue color line or a little below, you can take a trade. See here today came little below and then prices were stopped moving up. But the problem is your risk is increasing. So if this is your entry, this is going to be your stop loss below, a little below. So it is having a very big risk. So that's why what we can do, you can add a entry buffer. I was looking for that entry buffer, 0.1% I added. Even after adding entry buffer, this prices did not reach until the entry buffer. If you would have already 0.1% entry buffer we added. Even after adding 0.1% entry buffer, still it is short of 70 paisa. That's why I told you slightly missed the trade. Still 70 paisa gap is there from this entry. Today 11:15 candle, look into the low. The low of the candle is 1165 rupees 10 paisa. And your entry buffer, after adding the entry buffer, the value is 1164 rupees 40 paisa. So that's why 70 paisa gap is there. With 70 paisa gap, we missed the trade. But after that, it gave a very good profit. See, it reached the 15 minutes target zone. See here, you have a drop-based drop. So it reached this drop-based drop. We slightly missed the trade with 70 paisa gap after adding entry buffer to this fine-tuned 5-minute zone. Just 70 paisa below, we missed the trade. Otherwise, it could have been a very good profit. But those who followed, the technique I explained a few days back. What is the technique I explained? Entry buffer based on the price action. I have explained this technique in the analysis videos. I also added that video into the important videos playlist also. Important analysis videos, we have a playlist at our channel. There also I added that video. What is it I explained? Whatever the low you have, exactly at the low, a little below, you can take the trade. Or maybe exactly a low of this candle, you can take a trade. So that means you can add entry buffer up to here. But the problem is the risk is increasing. See, you won't get a RR. Let me show you why you won't get RR. Long trade, where is it? Yeah, long position. So this is our target. Let us assume timing, some stop loss I am keeping, a rough approximate value, and your entry is here. The low of this candle, just below, a little below, the low of this candle is your entry. Why low of this candle? Because this is your previous swing low, and remaining below you have institutional pending orders from this pro gap area, because here we have a pro gap. We have unfilled order. Below this low, we have unfilled orders. So that is the reason why the low we have taken as a reference for taking the entry. See, exactly this is the risk you have to handle. If you add this risk, what is the RR you are getting? 1:1.69 you are getting. 1:1.69. Your RR. You don't have sufficient RR. If you want to get 1:3 RR, at least where you have to take entry? One is to 3 RR, at least 1:3 RR. Yeah, approximately. Here, that means within this fine-tuned area, you have to take the trade. Within this fine-tuned area, exactly within the fine-tuned, almost exactly within this fine-tuned 5 minutes area, you have to take the trade. Then only you will be able to achieve 1:3 RR. Even by adding 0.1% buffer also you can't take the trade, because you are not achieving 1:3. Suppose you are a professional, highly experienced trader, you may accept at least 1:2.5. Even if you want to take 1:2.5, probably your trade will be here. This is the entry. This line is going to be the entry. This is the stop loss and this is the target. 1:2.5 you are able to achieve. Still you miss the trade. This is the entry. Still you will be missing, because your entry is at 1164.25, but the low of the candle it reached today is 1165.10, probably another 85 paisa you might have missed the trade, even to achieve 1:2.5 RR. So that's why I am telling it's a very close call. because it is very close. Even you can't do position sizing also because RR is not there. If RR is there, if the risk is high, at least you can do position size. You can't do position size against less RR. At least 1:2.5 or 1:3 RR should be there. In that case, if the risk is high, still by doing position sizing, you can take some trades. But anyway, we don't have any opportunity at all to go for a trade today because of high risk and also because of not having at least minimum RR. This is one important learning you have to observe. Otherwise, we would have got a good trade from ICICI from this long trade. Okay, this is the target. Reached the target, but entry we didn't get. This is about ICICI Bank. Next one is Cipla. Cipla is also a daily zone. I'm sorry, it's not daily, 75 minutes demand zone. Cipla is 75 minutes demand zone, rally, base rally. This 75 minutes zone is fine tuned with 15 minutes time frame. So here I have a rally candle, 2 base candles and a rally candle with pro gap. So this is the 15 minute zone I have drawn. Inside the 15 again I fine tuned with 5 minutes time frame. So in the 5 minutes time frame, we have a drop candle, we have a base candle, and then with a pro gap, prices are moving up. This is the fine tuned zone. Earlier prices came near to this zone, but they didn't get into the zone. See here, prices came near to the zone and moved up. Why near to the zone? Because there is a pro gap is there. See here, they already consumed the orders from the pro gap. Next time when you are planning the trade, a little below this, you can draw the line and from there you can take a trade if the risk is within your limit. Because already the existing risk is very small. Even after adding the buffer up to here, probably the risk will be within your managed level. Only thing is reward you have to look for. If reward is there, definitely you can plan a trade. By adding a buffer based on the concept recently you learned. What is that? From the low of this candle, you can draw a horizontal line. So at the horizontal line or a little below the horizontal line, you can plan your trade. But anyway, today prices did not enter into the zone at all. So this is the morning 9:15 candle and it was moving up. So we didn't get a trade opportunity. So this is about Cipla high liquidity demand zone. Next one is ACC. This is a 75 minute supply zone. So we are in the 75 minutes time frame. This is what our software identified. So this is the drop candle and then 1, 2, 3, 4, 5 base candles and again a drop candle with a hidden body. And within this 75 minute zone, fine tuned with 15 minutes time frame. So in the 15 minutes time frame, we identified a rally, 2 base candles and a drop candle. Rally, 2 base candles and a drop. This is the 15 minute zone. This is the 15 minute zone. So inside this 15 minute zone, again fine tuned with 5 minutes time frame. So here we have a drop, base, drop. After that prices were near to the zone, some rejections from here, prices came very close to this zone. That means there is a strong institutional order flow is there in this area. See here also prices came very close to this zone. So definitely we want to plan a trade when prices are, because one reason is risk is very, very small, and the second reason there is a strong institutional order flow here because prices are coming here and going down. But unfortunately today prices didn't move into this area. From here itself it came down. You may ask a question, have we missed any trade here? See, from here prices came down. Actually, there is one zone is there, 5-minute zone. We have a rally, 1, 2, 3 base candles and a drop candle. Sorry, this is the rally, 2 base candle. That way we can draw a zone. But no, I'm just cross-checking whether my analysis is wrong or right. This is an aggressive trade if you take, but price action close should be supported. There is no price action close earlier. Let me backtrack and check. In 15 minutes time frame in this area, is there any 15-minute zone? Yes. I made a mistake in my analysis. I have to accept. Somehow there is a fine-tuned zone. We have a drop base, a drop. 15-minute zone is there. That's why I'm wondering how well this zone is working. Sorry for my mistake. So in my analysis I missed it. Definitely some of you would have done this analysis and you would have got a good trade today, short trade. So we have a 15-minute supply zone. Within the 15-minute supply zone, we have a fine-tuned 5-minute zone. See here, this is a 75-minute zone. Within 75-minute zone, here we have a 15-minute zone. So I'm changing the time frame to 15 minutes. So yesterday we have a drop base, a drop is there. Here we have excellent 15-minute zone. Within this 15-minute zone, again we have a fine-tuned 5-minute zone. So here we have a rally candle, 2 base candles and a drop candle. So exactly in the fine-tuned area, it took the trade at 9:30 candle. This is the 9:25 minutes candle, this is the 9:30 candle. So prices entered here, went up to here and then came down. Definitely it would have given you very good excellent trade. Where is the 15 minutes target? So here we have a 15 minutes. Rally, base, rally. This is the one. So when at 9:30 candle we got the entry and at 12:45 candle it reached the target. So how I missed it? It's my bad. So excellent profit. So we need to calculate the profit now. Because this is an excellent opportunity our software has given. Maybe I did a mistake in my analysis. That is a different story. But software has done its work. Maybe you would have fine-tuned this zone and you would have got a good short trade from here. So at 9:30 candle, we got the entry. And 12:45 candle, it reached the target. So let us calculate the profit. So I'm going to the 5 minutes time frame. So this is the entry. According to this, the low of this candle, maybe a little below, you might have added some buffer. But anyway, I'm calculating maximum opportunity our software has given. So I'm considering the low of this candle is the entry. What is the low of the candle? 2,342.05. What is the high of this candle? 2,342.30 paisa. So definitely your order is executed. Because your order is a little below itself. Prices went beyond your entry, few paisa beyond your entry. So your order would have been executed. So the low of this candle is 2,342.05. So let me add into the calculator. 2,342.05. Let me check the value again. So the low of the candle is 2342. Yes. Okay, minus. What is your target? 15 minute zone target. What is the close of this candle? 2323, 2323.45, 2323.45. Let me verify once again. The close of the candle, 2323.45. So 18 rupee 6 paisa. Have we got the RR? Let us verify how much RR is there. That is also we have to check. So we have a short position. So roughly I am adding some buffer here, approximately. Let us assume we are taking exactly at the entry level. From there we will calculate the RR. Without adding any entry buffer I am calculating. But stop buffer I added. And exit will be at this close to this 15-minute zone, not inside, very close to this. Okay, approximately 1:4 RR is there. We have 1:4 RR. Maybe if stop buffer, even if you add some more, yeah 1:3.65 RR. So you have around close to 1:4 RR is there. Close to 1:4. So you have enough RR and it reached the 15 minutes target. And it is also having a fine-tuned 5-minute zone. Fine-tuned 5-minute zone is there. The only thing I am wondering how I missed this in fine-tuning. Maybe I was in a sleepy mood when I am fine-tuning these zones. Sorry. But anyway, definitely you guys would have done this and you would have got a good trade from this stock today, ACC. So please comment if anybody took this ACC trade, please comment in the comment section. I will be happy that you are doing, you are properly fine-tuning the zones. Perfectly, you are fine-tuning the zones. Okay, anyway, what is the profit? We will maximum given profit. See, you might have taken a trade a little before this and you would have exited a little before this. But what I am calculating is the maximum opportunity our high liquidity zone generated by our software has given. That is most important. That is you can't take the profit beyond that. But within that, within the given maximum profit, how much profit you grabbed, that you have to compare. Okay, ACC margin calculator. Let me open the margin calculator. So ACC is not in this banned list today. So definitely the trades are executed from the futures point of view. Some of you would have taken in cash segment during the intraday. So the lot size is 300. So 5,580 rupees profit. ACC. $5,580. And what is the ROI? See, you would have taken a trade here. Now prices closed here. So from the existing, some more additional value I need to add, so that ROI, if I add exactly this value, whatever the ROI is here, this is the one at the time of closing, 1,63,962. If I would have added this, your ROI will increase. But to be honest, when prices are here, the margin cost would be a little higher than the current value, because the prices were down, margin cost is reduced. Maybe another 100 or 200 rupees more might be there. So this is 1,63,962. So let me add 1,64,100 rupees. So into 100, approximately I am calculating 1,64,100. So you got 3.4 ROA. This is the 75 minutes high liquidity zone. ACZ is a 75 minutes high liquidity zone, a short trade. That means supply zone trade we have taken. So sorry for missing this analysis in my yesterday. Generally what I do yesterday, after I generate the report and after I complete the recording and upload the video, I take all the high liquidity zones, add them into this watch list, and then analyzing one by one all the stocks. Generally I don't miss, but how I missed it, I'm wondering. So this is a 75 minute zone only, right? Yes, this is a 75 minute zone. It's not a daily zone. Because supply is a demand zone. After that you have supply zones. ACC is 75 minute supply zone. From this 75, 15 minute zone is here. How I missed yesterday. We have a drop base, excellent drop base drop. Clearly it is visible, clearly it is there inside. But why I didn't bother about this? You can also draw one more here. Drop, base, drop, one more LOTL zone is also here. This is also a valid supply zone. These two, this is also a valid zone. You can draw, it is LOL. If you draw week to week, both are overlapped. Okay, what I do, type 2 proximal I am drawing. Let me check whether there is any fine tune here. Because if this is violated, the next any fine tune probably so here you have a drop candle, you have two, so maybe this I can consider as a ERC, but still if you consider this leg-in as a ERC, it's not really ERC candle. This is looking like base. I told you sometimes you can compromise and you can draw. If that is the case, this is a fine-tuned 5 minute zone and it is already tested and risk is high. But in case if you don't consider this, you have 1, 2, 3, this is not a valid leg out because leg out comes within the zone. But how many base candles? 1, 2, 3, 4, 5, 6, 7 base candles. This is the, or maybe you might have considered this as a ERC candle, or maybe this also ERC candle. Next 1, 2, 3, 4, 5 base candles will come. Let us assume this is the ERC candle. Definitely this is ERC, no doubt in that. This candle is a ERC candle and these are all the small candles 1, 2, 3, 4, 5. If you will be drawing a zone, 5 minute zone like this. And the leg out is inside the zone. So it is not a valid leg out. That means there is no fine-tuned 5 minute zone. That way also you can ignore. So drawing a zone here is not meaningful. But this is a perfect zone. Generally I feel bad if I miss my analysis. But anyway, we have a drop based drop. A successful trade is executed. So a successful trade, it is a successful trade and executed perfectly by reaching its 15 minutes rally base rally. Okay, this is about ACC. which is missed from my analysis, but anyway we completed now, and the opportunity we have recorded in our Excel sheet. Next one is indexing. This is also a 75-minute supply zone. Drop 3 base candles and drop. This is what identified by our software. Drop 3 base candles and drop. And this one fine tuned with 15 minutes time frame. We have a rally base drop. Rally base drop. We have a 15-minute zone. Inside again we fine tuned with the 5-minute zone. Rally 3 base candles, and this is a medium size leg. This is also part of the base, so total 4 base candles, and then a drop candle completely moving out of the zone. And this one is just ignoring this. Actually this is also considered as part of the leg out formation. That's why I have fine tuned up to here. Sorry, here. This is the fine tuned 5-minute zone. Here the actual order flow is there. Because this is the legging in the 5 minutes, so I am just ignoring, even though part of the base. Till here I am considering this is the actual order flow here. But anyway, today prices did not enter into the zone. Next one is IRCTC. This is also a 75-minute zone, supply zone. We have a rally, 2 base candles and a drop candle. Rally base drop. And this rally base drop again fine tuned with 15 minutes time frame. So here again you have a rally base drop and follow through candles. This is the 15-minute zone. Within this 15-minute zone again I fine tuned with 5 minutes time frame. So changing the time frame to 5 minutes. So here you have a fine tuned 5-minute zone. You have a rally base drop. But here also prices did not enter into that area. But yesterday you see prices came near to this, and after that it came down. Probably in this area strong order flow is there. But today prices didn't reach up to the fine tuned area, so we didn't get the trade. And Nestle we already discussed. This is the first stock we discussed. So that means total today we got 2 trades instead of one, what I thought earlier. We got 2 trades and 2 successful trades we got. So this is about high liquidity zone analysis. Let's all meet again in our next video. Thank you.